So John, this is the geek in me, I have to say, where we dissect what's happening in the economy and try to break it down into palatable terms for people that don't do this every day to really kind of understand. And so we talk about market cycles, people talk about the market and how the stock market goes up, how the stock market goes down. And we have the same situation in real estate, and it even trickles over into business brokerage. And so we put out our paper every year, this time of year. And so this is a great visual that we like to share with folks. So we're going to break it down for people to understand. And this is a Charleston based visual, right? This is Charleston, South Carolina, which has been growing like crazy. John, I mean, how crazy is Charleston's growth of population?
Yeah, I mean, it's amazing. It really is. Where I think we're pushing 900,000 in the metro, all Charleston region. And as you know, David, we had a meeting with some experts a while back, and they say once we reach that level, about a million people, it tends to then double again in the next 10 years. So we're not done here. This area is going to continue to grow with our booming port, all the new manufacturing, so we're not done for sure.
Yeah, absolutely. And so when you look at this visual, you'll see it goes expansion to hypersupply to recession to recovery. Now, we're not claiming anything yet. I'm just telling you, it flows in a clockwise position so that you can understand. And the challenge is sometimes just looking at the entire Charleston market all at once. So what we've put on here is how office is doing, how retail is doing, industrial, multifamily, residential. We've put it all in a templated format here so you can see it in one single visual. We also have some caps to discuss. Let's just start in the top left in the expansion market. Right now, we're seeing office in the late in the expansion cycle. And that means that if you had to look in just the red portion, it's moving towards a hypersupply. And I'll have to explain that in a minute. So we find office there, we find retail there, and we find industrial there. And so things are expanding. So when people say Charleston is booming, rightly so. The question mark of office is, how is this hybrid workplace going to work out? How are people going to use office space going forward? Are they going to continue to tell their people to stay at home? And it's not just for any risk of virus. What they're figuring out now is, wow, we have been operating so inefficiently in our office. I mean, John, we're a hybrid work model, and I think it works extremely beautiful, don't you?
Right, absolutely. This, of course, the offices took a huge hit with COVID, and we didn't know what was going to happen. But as we're coming out of this COVID, we realized that, hey, people still need offices. People still want offices. It's great that we can do this, Zoom in, Zoom out type thing, but there still needs to be, that landing pad that maybe it's a Wednesday through Thursday, or I'm sorry, Wednesday through Friday, and then you're working from home the rest of the time. But we're still going to need offices, and we really see that in this market now, getting a lot more looks from investors and users, office users. So.
Absolutely. So when we look at this, we look at cap rates. If you're not familiar with cap rates, it's capitalization rate. And what that basically means is if you were going to compare properties, you try to bring everything to a capitalization rate, which gives you the chance to compare properties against each other. Now, I want to point out to you cap rates because it's commonly misunderstood, unfortunately, but cap rate is just a 1-year look. It's not the whole 5-year hold, the 10-year hold, the 20-year hold. It's just a capitalization of the income, and it's the net operating income. That means after all the expenses are paid, okay? Before you start talking about mortgage payments or anything like that, it'd be like, if I bought a property today, how much income could I expect to get out of that property before I paid any debt service on it? Because there are people that buy properties for cash, right? So when you look at that, I want you to understand that the office, when people are selling, they're selling office buildings or office investments at a cap rate somewhere between 6.75% and 7.75%. So when we move down to retail, they're at 6.85%, and these are averages again. And then when we get to industrial, you look at the cap rate somewhere between 6 to 6.75%. Now, this is very well vetted research. Okay, this research that comes from multiple channels. It comes from multiple channels, specifically one of the most diligent research groups I've ever seen in my entire career is Integrity Realty Real Estate, IRR. Their expansive paper is phenomenal. They break it down, they do all different types of things. So always tip my hat to that crowd for doing such a wonderful thing. And then there's also us looking in the market from doing the actual transaction. So when we're expanding, we could expand here, and we're going to go now over to hyper supply. And John, we talked about this right before the call, right? Multifamily, it could be deep. It's mid-cycle, but I think it's almost getting ready to get late in cycle for that multifamily hyper supply. It's got me a little concerned there. What do you think?
No, absolutely. We are, somewhat nervous about this sector, just because there's so much supply. And there's still, you look at downtown Charleston and you see all the cranes there, and they're building these multifamily places. So we're a little bit leery about that right now, for sure.
Yeah, and how's it connected to that residential component, since we do residential real estate as well?
Yeah, thanks. I did want to add that. It was years ago, everybody was saying millennials are not buying homes. They're in apartments, and they have no reason to ever buy a home. They're different. Well, guess what? They're not different. They're having kids now, and they want to get out of those apartments. They want a backyard. They've got dogs. They want fences. So we're seeing these millennials now moving out of the apartments and searching for homes. And of course, everybody knows the problem is there is no supply out there for single family homes. So we're in kind of a tough situation with that.
That's what happens. You're forced to quarantine. It makes you look at the four walls of an apartment. You got the new dog, the dog and cat boom over COVID, and you're sitting there and you're thinking, I'd like to have a little more outdoor space, because I feel almost uncomfortable how small this place. And then on top of that, we talked about hybrid. They're working out of multifamily units. They're not going into offices anymore. It almost can become depressing, right? A lot of people in New York City walked away from their leases, moved back in with mom and dad when they were younger in their career because they could work remote. And now they're saying, let me do something different. And that's what we're seeing as we move into, and I don't want to even insinuate that residential is in a recession, but I had to put a question mark there, John, for recession because of the concerns in residential. I mean, low inventory. I know our average balance Charleston Trident Association of Realtors inventory count ranges somewhere between 5,500 homes and 5,700 homes available for sale. We're under 1,300 homes in the entire Charleston Trident Association of Realtors MLS available for sale. So that low inventory, have we seen some competitive situations, John?
Oh, absolutely. Everybody hears it, multiple offer situations. House comes on the market, it's under contract in a matter of hours. But I don't see how we're going to get out of this situation, because even the pipeline for new home construction here in the region, there's not a whole lot of it, and people are moving here because of our booming economy, because of our incredible weather, and it's just happening. So we've got to really look at this, the residential inventory issues, and try to work our way out of it.
Yeah, absolutely. And as policy might change, policy that is beyond our control, policy by lawmakers, that there's a lot of discussions now about what's happening in this situation, the low inventory. And so there's always the risk that the government could write up a policy that we're not expecting. We absolutely feel fundamentally critical that everybody understands that interest rates are starting to climb. We think they will continue to climb. And so now the inventory is, there's almost a shadow inventory, John, what you say, people doing some deals off market, which can start to skew our comp set a little bit.
Yeah, I mean, we see a lot of this off market. And then all of a sudden it pops up on the MLS as under contract already. So That's what happens in these hot markets when it's this crazy. You know, they don't even come on market. So
Yeah, and if you can do it, if you can sell it for sale by owner, hey, John and I, we've given you 30 steps on how to sell without a realtor. So we know it's real. We're not burying our heads in the sand. We understand that that's a real thing. We just want people to be careful when they do it. And consumer behavior is changing. Everybody's behaving a little bit differently now, working out of home. Amazon has exploded, but yet people still expect everything to come now next day. But unfortunately, supply shortages are really starting to impact the residential market, where maybe the deals are not making sense even for some of the home builders. New home construction, they've been increasing the prices on people as they're going through the process, because they're running in and passing along some of the cost of construction, which can be very frustrating. We've had a couple of frustrating experiences with people that wanted to buy brand new homes, and thankfully we were successful. But to see the prices go up on them, it's hard to watch. But it is just kind of where we are, and so that takes us over to recovery. Inflation, it's here, it's happening, and supply chain issues are doing it. And so why are we saying to be determined over there, John? That's kind of ambiguous.
well, yeah, but we don't know. Look, we're not some soothsayers here. We don't know what's going to happen. We really don't. Could there be another COVID? Of course. But the supply chain issue is real. The lumber prices are real. The lack of appliances is real. It's a strange market. It really is.
It is. And so that's why the important thing for you to do is to do what is in your 100% very best interest for you in your situation at that moment. And that's a really silly thing to say, because everybody's of course going to do what's best for myself. The scary part is there's a lot of information that goes into these decisions, and sometimes you can miss it because you haven't taken the time to slow down and study the market. People call us all the time, okay? And this happens, to be fair, it happens for people that we put in our trust tribe, people that just know us well enough to know that if they call us, we're going to give them the very best advice, whether they do a transaction or not. And the people that don't know us, they may be hesitant to reach out and call us because, yes, we're realtors, we're business brokers, and they may feel like they're going to get oversold. It's just not our style. We're going to give you the very best advice and information in the moment at that time, whether you transact or whether you don't. There has been times that people have called me for advice wanting to hire us, and by the time we walked them through what was in their best interest, before you knew it, they wanted to do the for sale by owner. We have no ill will about that. We wish them well, but we were going to equip them, because you'd never want to look back and feel like you didn't get good advice. I don't ever want to look back and feel like somebody didn't give me a good advice. John feels the same way. And so that's what we want to offer up to you. And the closing thought I'd give you, if you go to the upper right, it's the going in cap rates. I really want to point that out to you. So what you've seen throughout this whole presentation is really where people are going out. That means where people are selling. People are exiting the deal. They're selling the money as a multiple of the income that it produces. But the going in cap rates, and I want to really draw this distinction. Look at the going in cap rates. And again, this is Charleston specific. It goes down from Class A, if you're not familiar with that, that's brand new, nicer properties, just a few years old, all the way down to Class B, properties that have probably been 7+ years old. They're starting to need a little bit of love, a little bit of paint. But it's important for you to know that when someone is buying the central business district office, they're going in paying a 6.5 cap rate, right? That's still pretty steady on where people are selling, right? You go through the office, you start to see that, but really look at the urban and suburban multifamily. And I want you to start understanding why, when we give you this analysis, we're telling you that there may be reasons to pause. If multifamily is selling out at the 4.65% cap rate, but they're going in at the 3.5 cap rate, they're paying a lot higher prices and they're getting lower cap rates because they've got to put the money out on the street. So if it's an insurance company, a real estate investment trust, they've got to put the money down, and sometimes they're paying a little bit too rich of a dollar, in our opinion, because they've got to put that money in play. And so that's when we're going to start to see maybe the market shift. And the reason why I want to illustrate that is the final point. From the point I made about you've got to do best on your personal decision versus what's starting to happen in the market, is we're starting to see that place where, but this is where it's sold for, and this is what the market's paying. And you've got people competing. And what's happening is that they're not matching up exactly right and what we would consider to be like an arm's length fair transaction. We've got behavior and people's motivation to make a deal work where it's still very much a seller's market. And they're standing and saying, hey, if you don't buy it, somebody else will. And it's even challenging for the appraisers that we talk to, and we talk to a lot of appraisers, to come up and say, yeah, I can't argue with where these guys agree to buy and sell. So look, we're here for your questions. John and I have been doing this for a very long time. We're super excited with the agents on our team that have the same level of training and knowledge. So please reach out to us. But if you don't, please study this visual and understand how it can impact your personal situation. And please get good advice. We think you should always be getting your advice from your CPA, and you should be talking to your financial advisor, and you should talk to people that are in the business every day so that you can make an informed decision. And John, that's how people win here at the brokerage. So I'd like to thank everybody for their time. John, thanks you.
Thanks, everybody.
And have a wonderful, wonderful day, and let us know how we can help.